Hello, everybody. We're gonna just do a quick recap of tonight's section because I'm not really sure if the recording saved or not. So I am going to quickly go over everything and hopefully this helps clarify a few things. So when you first start out, you kind of want to know, especially if you're trading major pairs. Major pairs are anything with the US dollar. So you have these one, two, three, four, five, six, seven. These seven pairs right here are considered major pairs because they're going to either move with the dollar or move against the dollar. The difference between the two is anything that starts with USD typically will move with the dollar. If the dollar's going up, and the pair starts with a USD, we can expect that pair to move up as well. And anything that is not beginning in USD and ends in USD when the dollar goes up, these pairs should go down. Now, this is not all inclusive, meaning that each pair is unique as well because of the economy. News and what's going on in the economy could cause the pairs to not move with the dollar. So don't use that as your bias overall, okay? That's just to help you understand or help you get a small edge on the market when trading major pairs. Now, when it comes to what the first thing you should be doing is analyzing what the dollar is doing on in the market when you open up your charts just to kind of see, okay, well, most recently on the daily time frame, this market created a new, well, the market created a new high pretty much. The market the market broke out of this last selling candle, so I should expect the market to pull back into this zone and continue buying up. The only time I'm going to be changing my bias per se for a long-term sell if the market closes below this most recent leg up, which is your swing point. If you're not sure how to identify swing points, there's an indicator called fractals. These are the settings right here, period 6, and this will help you. Well, this is the style shapes, and I changed my colors, but this is the settings which will help you identify swing points. You're going to use your swing points to help you with identifying higher high and lower lowers in the market. So until the dollar closes below this swing point, we're in an uptrend. That's one way to confirm that. You can also use your trend line and see that this market has made higher highs as well based on what my trend line is telling me and these little interruptions pretty much. Okay, so now that I know that the market is trending up with the dollar, I had my most recent bullish engulfing candle. I got a breakout. Now I should expect a retest, so hopefully the market will pull back into this zone on the 4 hour. What zone am I referring to? I'm referring to the demand zone on the 4 hours. So in this case, the demand zone is, even though this has been identified as a swing point, you can see where the market had manipulated and passed that zone. So you want to include those wicks with this demand zone. So I'm going to go ahead and use this last selling candle and drag it all the way down and make that my demand zone, my 4 hour demand zone. Okay, so I expect this market to come down into this demand zone, and I'm going to wait and see if it respects it or violates it. If it violates it, what that tells me is that this is going to go to the next area, which is you look left, always look left to figure out what your next area is when it comes to your demand zone or your supply zone. Remember, your setup is always going to be on the left side. So if you're looking at this last selling candle right here before this market created a rally of buyers, this could be a small demand zone. Now, I also want to include the wick that passed by that selling candle and then mark my zone like that. So this market could continue down past this original demand zone and we could get a reaction right here before it buys up. We don't know. And that is why you want to use confirmation before you take trades on with these other pairs. So now that we've talked about the dollar, we kind of got an idea of what to expect this week. Let's go ahead and analyze EU. And we're going to start with our top-down analysis, okay? Now, in our top-down analysis, I'm going to take off these fractals real quick. You start on the daily time frame. Unless you're a swing trader, I would start on the daily 4 hour and the 1 hour as the three time frames when it comes to your analyst daily 4 hour markups for the zones and then your 1 hours for your entries. Okay. So for my daily time frame, I'm going to look at where market is at currently. I want to look at where market is currently and identify and start there. We're going to start on the daily time frame and I'm going to see, well, what I'm going to ask myself, what have the EU been doing recently? Okay, because this pair look like it's all over the place. Let me turn off these indicators. So with EU, you can see that recently the market created a new low based on this impulse leg, and now we are pulling back. Okay, so now that I know that this market created a new low, how do I know that? Well, this is a support area right here. How do I know this is a support area? Market came to this level, reacted, and pushed away before it finally broke through. So now I'm going to look for, now that I have confirmed that the market was selling, I'm going to look for a supply zone. And I'm going to look for the closest supply zone to market. The closest supply zone to market will be this last buying candle before the market broke and pushed below the support zone. So I'm going to mark up this wick, include the wick, the highest wick in this candle with my last buying candle. This is my supply zone. Now you have two options. You can wait and trade with the trend and set an alert and wait till this market come all the way in the zone and miss out on 162 pips. It's completely fine. That's like your most safest way to trade. However, this is the daily time frame. So you have to ask yourself, do I want to wait until the market moves 160 pips, or do I want to look for other opportunities? I know eventually it's going to go back to this area. So what I would do is I would drop to the 4 hour time frame and see if there are other opportunities. Now you can, if you know the market is going to come to the supply zone, there is a such thing called counter trend trading, which means you're going to be buying up. Okay, you're going to go against this initial impulse down. You're trading in the opposite direction of this overall move. EU has been making lower lows overall recently, pretty much since December. So if you're going to be buying, you're going to look for your demand zones on the left. So notice the market reacted right here. But if you look left, remember looking left is your setup, you will see that this last buying candle, this last selling candle was right here before this market brought up and broke above all of this consolidation, this big zone. So I'm going to mark up from here, the bottom of the wick of that last selling candle to the top of that zone. Now, here there's a little gap. I know this because I know how to trade gaps. If you don't know how to trade gaps or if you're interested in it, I can do a 101. But the easiest way is to use the indicator called the imbalance finder dynamic. Okay. You don't need to change settings. You just need to turn it on. Actually, no, the style you will change. You want boxes only, okay? And the visibility, the inputs, I think I changed mine everything to yellow because I only want to see the yellow boxes. So that's the only thing you're going to change for this imbalance finder. And basically what happens is I break out of a zone and I didn't retest. So I expect the market to come back and pick up these orders. So what I normally do is drag my zone all the way up covering the imbalance. And that is my demand zone. And as you can see, this market perfectly came to the zone, reacted in this imbalance area before it started to buy back up. Okay, so that's a little trick that I normally do. All right, like I said, you can wait until the market gets all the way up here. I can drag this to 50% of the zone, but I'm gonna keep it right here. Why am I dragging it to 50% of the zone? Because there's a imbalance right here on this breakout, and I want to include half of that at least. Um, or you can wait to, you can look at your zone, your demand zone, and then you can look for a buy opportunity because of the demand zone. So on the 4 hour time frame, so we've identified the daily demand on the higher time frame, and now we're waiting for a buy. We can go to the 1 hour time frame and wait for the market to come to this zone and wait for confirmation before this market before you get into a buy. What you're gonna look for is literally a head and shoulder pattern or a change in, you're gonna look for this pattern pretty much. This is if you were selling, and then the other one is gonna be if you're buying. So low, high. This is the sell. I'm sorry. This is the sell. This is the buy. I didn't finish the pattern. So the buy is gonna look like this: up, down, changing direction. Go. All right. So with these patterns, you're probably wondering what this is. So this right here is your demand zone. That's your demand zone. That's your last selling candle. Market moves up and it violates, then you're gonna take the sell. That's the pattern for the sell. This right here is your supply zone. So market pulls down, it violates the supply zone, retest, take the buy. You can use these two patterns for entries. Or you can simply, and I want to show you what that looked like on this particular chart real quick. So here you see the market is getting to your demand zone. So what I'm going to wait for to look is the first question you're going to ask is where is the lowest point right here. Now you can use your fractals, which I highly recommend if you're still brand new and trying to figure out where your swing points are. So the swing point for this whole move starts up here. So my last buying candle before the market created this impulse leg is pretty much right here. So I can mark up this zone right here. And the only thing I'm doing at this point is waiting for the market to violate this zone before I start looking for entries for the buy. Settle alert once you get your market to close above the zone, which was on this candle. What you're going to do now is wait for your retest. The retest doesn't mean that you take the trade the moment it goes in the zone. No. Sometimes, as you can see, the market will continue to pull back, past the zone, keep pulling back, keep pulling back. So so that's the reason why you don't immediately just jump in the trade once it gets to the zone. What you're gonna do is wait for price action to tell you that the buyers are in the building. And the way you do that is one or two things. You're gonna wait until you see your first bullish engulfing candle, which means that you have your first big bull candle, buying candle, engulf your selling candle, which is this little doji right here. That's one way you can confirm. Now, if this is not enough and you want to see that the market is moving away the zone and is pushing away from the zone, you can easily look for your last buying candle, mark this up, the zone right here, wait for the market to close above, take the retest, and then take the buy. So retest buy, you can do that. That'd be like a second confirmation of a second confirmation. But the difference between this one and then this initial one is because you had a whole impulse of a whole pullback, a whole move that was completely selling. In this situation, you've already confirmed that the sellers are no longer in the building because there was a close above this swing point. And now you know that the market has pushed away, and now we're at the point where we're waiting on our retest to enter the trade. That's the difference between taking this move here after this first break above this last buying candle versus doing it here in this zone, taking the entry here. So don't confuse the two. All right, so you can wait for that beautiful pattern, changing direction, buy, and then you're in the trade. Set your stop loss below the swing point. The swing point of this whole move is about right here. Okay, so this, if you use this tool, the long position tool, this will tell you about how many pips you're going to be risking. And in this case, it's 42 pips. Now, where are you going to take profit? Well, that depends on how much you want to make. But in some cases, you got to analyze, okay, well, I analyzed this chart on a higher time frame. I can patiently wait. It go to the 4 hour time frame and look for my next zone, which is this zone right here. Why is this my next zone? This is the supply zone. This is the last buying candle before market broke below this wick. Okay, this wick, this area right here had buyers in the market, so I could use this as a target, and that could be my setup, my trade setup right there. It's a really good risk to reward ratio. I'm risking 40 pips to make 80 pips. And that's if you are patient enough to hold it that long, okay? Or you can just get your 20 pips a dip. It's up to you. It's all about your comfort zone. So that's pretty much everything we covered from top-down analysis, identify your zones and your entries. It's the same way with supply zones, and I'm going to quickly show you what that looked like on a different pair. Let's go with, I would say this zone. We can go with this zone. It kind of violated it, but oh, well, actually, no, because it won't even be there on the daily. So this one hasn't gotten to the supply zone just yet on the daily time frame. So yeah, it hasn't made it there yet. Tip of the iceberg. It definitely needs to come in a little bit more. So let's see if I can. Okay, this is a good example. So right here, this is my supply zone on the daily time frame. Okay. I'm gonna bring this down because there's an imbalance. As you can see, if I wouldn't have brought it down, you would have missed this move, okay? Because the length of this last buying candle is right here, so you definitely would have missed the move. So I like to bring it down, and then when market gets into the area, set my alert. Just go ahead and drop to the 4 hour time frame. I have the fractals on for those who prefer to use the fractals. What I'm waiting for is my head and shoulder pattern, my changing character, my changing direction, whatever you want to call it. I'm waiting on confirmation before it's time to get in the trade. Okay. And in this case, this market is still creating higher highs. Okay. This is the last selling candle that pushed the market up. So I'm looking at this zone to be violated before I start looking for sales. As you can see, the market eventually violates it and closes below this level right here. So that's the candle that closes below. I'm waiting on my retest. So we got the confirmation that sellers are in the market. Okay, now I'm waiting on my retest. The retest involves the pullback. So this market is coming back up. So now we got buyers in the building, technically, because the other pullback. So I'm just gonna follow this little path. Remember, we're on the retest leg. And so now all I'm waiting for is two options. You got your first bullish engulfing candle, which tells you, all right, the market is ready to sell. You can put in your trade there. And or you can wait for another break in structure. So this is your first entry. You would have been in profit. You would have entered this trade. Confirmation, wait for the pullback. Start from here. That's about 23 pips. Or you can wait until you get another break in structure. So in this case, it broke this demand zone right here. Pull back, and that would be your entry right there. Okay, and just to show you what that demand zone look like, this is going to be it in this particular case, because now we're looking for the entry. This is the last selling candle that made this swing high right here. And so now this was the candle that broke and closed below it. Waiting for my pullback, and I'm just going to enter the trade at this point. So that's the difference. And then as you can see, a little bit of consolidation, but you finally got that beautiful drop. So just trust the process, be consistent in your confirmations, be consistent in your setups and your top-down analysis. And for those who like to trade with news or use that as a part as your trading plan, you can go to Forex Factory and look for red and orange folders, or you can use my Forex book to identify high impact versus low impact pairs that's going to be trading. So I hope I was able to clarify a lot of the um, some of the concepts on the supply and demand, the starting point, whatever you want to call it. Same, everything's the same, and then also your confirmations for your entries. So thank you for joining me. Good luck, happy trading, and don't forget to drop those charts. All right, y'all, take care.